Welcome back to Accrued Interest. Today, April 3rd, I'm doing a special emergency vibe check episode where we take stock of the falling markets and talk about what to do from here. But first, as always, a brief disclaimer. The information presented on this podcast is not and should not be construed as investment advice. Investors should make their own decisions regarding prospects of any company or investment on this show. Now, I got some good news and some bad news. I'm pretty sure you can guess what the bad news is. So let's start with the good news. I want to give a warm thank you to all of my followers and viewers. Last night, this channel crossed over 1,000 subscribers. I really appreciate all the time that you have spent on my page and being a trusted voice in your life. I take this channel very seriously. So again, I just want to give a big thank you and let you know there's a lot more great content on the way. Now, back to the bad news. The markets are on fire. In what can only be described as an unprecedented crisis, the global financial markets are in turmoil. The United States, with its announcements of a slew of tariffs across a whole bunch of countries last night, is acting like an arsonist. It's like the United States is trying to burn everything down with little to no gain. If you're tuning in, you probably have seen the headlines, and if you looked at your 401k, please don't. I'm sure it's down. All of the countries and all the economists and people up and down Wall Street and Main Street are actually surprised that the tariffs came in worse than we expected. Now, before you go trying to buy the dip, what everyone's trying to understand is this time different. Usually during crises, it's a good buying opportunity because in the long run, things work out. To help us answer that question, let's do a recap of how we got here. Bear with me for a second because I am actually going to use myself as a reference. Over the last 3 weeks on this podcast, I have been quite bearish. It really began around March 10th on the Vibe Check episode. I said that it was more probable than not that the US would enter a recession within the next 12 months. The current market sell-off, I said, was not an overreaction. There were real headwinds to economic growth in this year. I also said, in the spirit of full transparency, that I sold all but 3 of my stocks that week. And I was currently about 10% cash. Despite all the clouds in the distance, I thought it was crazy that consensus back on March 10th was that the recession only had a 38% chance of happening. Fast forward to the next Vibe Check episode on March 17th. More of the same. I was still bearish and even more so. I was pointing out that consumer sentiment was deteriorating at an alarming rate. There were multiple soft data points to weakness that were coming into focus in the hard data. It seemed to me like investors, economists, and talking heads in general were moving the goalposts because they did not want to be perceived as being overly critical of the current administration. Have you ever seen the Lego Movie? To me, the character President Business seems very much like our current dear leader. Many portfolio managers are saying today that sometimes the best strategy in a negotiation is convincing the other side that you are crazy. To that, I would ask, really? Is that really a good strategy? And what if you are crazy? We can't rule that out. A big reason the markets were selling off was because investors were realizing that there was not going to be a pot of gold, an economic boom, more activity in mergers and acquisitions that was going to propel the market forward. Despite that, many people were still saying that everything is fine. There's nothing to worry about. This is just a negotiating tactic. The will they or won't they reminded me of the Kendrick Lamar Not Like Us performance at the Super Bowl, where all the dancers were just wondering, is he really going to do it? Well, they did, and it was really bad. Worse than we had actually ever expected. The Washington Post, among others, were reporting that behind the scenes, President Business was telling many aides and close staff that he wanted to go as big as possible on the tariff announcement. Despite all these signals, investors still did not take the threat seriously enough. Some economists were just saying recently that their baseline were that the tariffs were going to be substantially lower than the worst case scenario. Well, yesterday came and we got the worst case scenario. I think we can definitively say, yes, this time is very different and it's not good. We are not dealing with rational actors. The The United States, in the economic sense, is acting like a rogue nation. We are actively trying to harm countries all over the world, and we're doing it in a haphazard way that has no mathematical justification. In the list of tariffs that was rolled out yesterday, there were tariffs that were put on countries that were basically remote islands with no inhabitants. How can you place a tariff on penguins? Does that sound like someone who's not crazy to you? Does that sound like 4D chess? What worries me the most is I believe the current administration is about to dig in. Secretary Lutnick has been out on the talk shows this morning, and he's been saying that there's no chance that we back off on tariffs. This has been the consistent message from the administration. Up until now, I think it's been a mistake not to take them seriously at their word. So, here at Accrued Interest, we are taking President business both seriously and literally. America, you're in danger. We are nowhere near out of the woods. The market might bounce higher from here, but my base case of recession is all but inevitable. With that, let me leave you with these thoughts, which were literally the same points that I said in that first episode 3 weeks ago. Do not feel pressured to try to call the bottom. It is perfectly reasonable to raise cash. If you need to sell any stocks in your portfolio, you should only own stocks that you would be comfortable holding if the market closed for 1 to 2 years and you couldn't get out. Stay smart, stay defensive, and live to fight another day. With that, as always, thank you for listening. We'll probably be doing some more vibe check episodes, and I'll get back to my single stock episodes where I do deep dives. Thank you.